Okay, you guys see my chart now? MOT is method of trade, Paul. It's just method of trading. I'm going to show you my basic method of trading. All right, so because we have so little time, I'm going to just get right down to the triple Fs. Too much pips. What do you mean, too much pips? Oh, because no, my whole point. I was having this whole conversation with myself in this room because I was trying to explain what I do on an intraday basis, and I realized the whole thing is frozen. I'm basically talking to nobody. So, anyways, what I wanted to show you was my triple F way of trading. I call it triple F because it's basically three particular Fs that I trade. First F stands for flow. So let me just type that out. Flow. Second one is funda. And the third is feeling or force, whatever you want to do, however you want to characterize it. Flow, I define as 50 points in one direction. If I have a move of 50 points in one direction, I consider that to be good enough trend that's going to open up my eyes to a potential trade. That is, if I have 50 points of move without a retrace, there is something going on in the market. Now, here's the assumption, basically. The assumption is that there's a story in the market, if I have 50 points worth of movement, that is worth following. Sometimes the story is obvious. Sometimes the story is completely not obvious. Sometimes the story is totally bogus and you get tripped up. That's the essence of what you do. The idea here is that more times than not, the story is legitimate. And it's your job, one, to uncover it, and two, to try to trade it within the structure. So the funda part of it is basically understanding what the story is. Funda does not necessarily mean only fundamental news, such as, great NFTs, bad GDP, good current account, high inflation, strong IPO, blah, 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 every other piece of data that we watch on the tape. And trust me, I trade funda. What I mean by that is I trade stories. The FX market, in my opinion, or at least the way I trade it, is not about indicators. It's not about wiggly spots on a chart. It's not about moving averages or Bollinger Bands or any other bullshit that you put on your chart, because all of that tells you everything that happened. None of it is about to tell you what is about to happen. We get paid on the future. We only get to analyze the past, right? And so to me, indicators are really worthless because they all tell me about what happened yesterday, when in fact what I get paid for, what I get when I earn my little green circles, is me trying to figure out where the future goes. And the future is dependent on news. And news is what is basically funda. So funda is all type of news. It's equal to echo news, official commentary, comments, geopolitical events. And the key that I try to do every single day, every single hour of the day, is to figure out, okay, what's the news that's hitting the tape? Is it meaningful? Is it going to have continuation? Do I want to join the flow? So flow is my first move. Funda is my sort of second analysis. And then lastly, although feeling sounds very wishy-washy and sounds kind of like, very 70s, soft, touchy-feely, the exact opposite. Feeling to me is the ability to quantify how strongly you feel about it. And you can do it in several ways. For example, Kathy and I discuss a lot of our trades. We do it on a 1 to 10 basis. How strong do you feel about the trade? If I feel 50-50, if I feel 5 on a basis of 1 cent, if I feel 5, we don't even consider discussing a trade. If I feel 6 strength, we really, really try not to take a trade. For us, unless I feel 7 or 8 in terms of my strength of my economic news and my strength of my flow, my analysis, I don't really want to take the trade. On an intraday basis, what I basically do is I modify my question to myself in terms of, do I feel fully committed? That is, I want my full position on, or do I want my half position on, or do I feel super confident? Maybe I want 1.5 times position on. And this, I think, brings me to the next question that is very, very interesting. What is it that we trade with in terms of position size? To me, let's take a $10,000 account. right? That's what I would call working capital. And this is the key thing that I want you to kind of look when you're trading. This is not when you're trading. $10,000 is not your portfolio. We're not investors. We're not looking to make 5% or 7% on our $10,000 account. It is our working capital, which in the FX market allows us to, let's say, leverage it to, 10 to 1 is maximum that I would do, which gives me 100,000 face value that I want to trade with, right? The way I look at my working capital is not how much money I can make, but how much money I can lose per trade. In other words, I set my standard trade size on let's say, a $10,000 basis would be maximum $400 loss, right? 4% loss. And the reason why is because if I have 10 losses in a row, I still have 60% of my working capital with me. And again, notice that I don't say, I would never treat my safe money this way. I would never treat my portfolio money, my hundreds of thousands of dollars of money, so cavalierly, saying, oh, if I have 10 trades in a row, I still have 60% of it left. That's certainly not what you want to be doing as a prudent investor. But as a trader, this is your working capital. And it's reasonable for you to be risking, the prospect. This is the worst case prospect. To me, the worst case prospect is 10 losing trades in a row. 10 losers in a row. Ask yourself, what can you tolerate as your basic drawdown on your working capital? Divide that by 10, and that would be your basis for your maximum loss you want to allow yourself. And then you simply go in reverse, right? So if $400 is all I'm willing to lose on a trade, right? And if my standard protocol of trading says 50-point loss, then it's obviously, it's very easy that I'm basically trading 80,000 face value, right? Not 100,000. I'm trading 8 mini lots, 80,000 face value under that condition. So if I have 10K, my full trade is 80K face value, and with a 50-point loss. That assumes that I trade 50-point losses. That's what 50-point stop. You see how I don't even care about winning? I don't even think about making money. What I'm thinking about when I try to structure my whole day-to-day trading account is what is the most acceptable losing money that I can make, and then I just focus on trading. Then I focus on making trades that are within my structure. And this is the single most important thing that I want to show you, is that all of my triple F analysis, all of my understanding of flow, all of my stuff that I do on a day-to-day basis that many of you are so familiar with in terms of, meat of the trade, long scalp, all the stuff that I do in terms of running for zeros and everything else, none of it means anything if I do not take stops. If I do not take stops every freaking time I have to take a stop. This is actually a really bad example. So you see how many stops I took in dollar Swiss? I took a ton of stops in dollar Swiss. That is exactly. So Boogie, how come 80K? Because my maximum loss is $400. I went through the math, try to do it just go back through the, I don't want to go back through the math just for one person. Yeah, this thing is going to be recorded. You can go back through it and you can understand it. But the bottom line is, the question I ask myself is, how many, I allow myself 10 negative trades in a row. What's the worst case scenario? How much do I want to be down in that position, in that case position? Under that scenario, I want to have 60% of my working capital left with me if I have 10 negative trades in a row, right? The key thing is I want to avoid what's called risk of ruin. That is complete destruction of my account. And because I'm always trading on leverage, because I'm always in a leverage situation, I always take my stops, right? Always. I know that a lot of people are going to teach you average in, average out. You should be in zones. You should be, no. Avoidance says the negative mindset. It's actually quite the opposite. It is the positive mindset. Because if you focus on losing, winning will come naturally. If you focus on winning, you will do nothing but lose. That is the actual sort of complete counterintuitive aspect of trading. Trading is all about controlling risk. and then feeling confident enough in taking positions because you know you have risk control. That's the key thing I kind of want everybody to understand. The moment you stop thinking about risk, the moment you start fearing risk, the moment you start fearing taking your stop, the moment you start moving your stop, the moment you're saying, I'm going to add to the position and add more stops, and move my stop another 50 points because I know the market is going to come back, is the moment you have already lost. You may survive that time. You may survive the next time. You may survive the next 3 times forward. But I guarantee you, that is the moment you have just signed your own death certificate. Because that is the moment you have lost control of risk. That's what I'm trying to communicate to you guys. I cannot say it in any stronger possible way because I am a walking example of millions of accounts getting blown out. I have blown out more accounts than probably many of you guys have started until I've learned this very, very simple rule. That if you do not stop, you will never win. Right, so how many, I'm actually curious. How many of you guys have moved to stop? How many of you guys have moved to stop? Right. Has that, after you moved your stop, did it just happen that basically the lower stop get hit? Yes. All that happened is that you lost more money, right? Moving your stop is just simply a license for the market to take more money out of your pocket. And here's the key thing. How many trades did I make today? Let's take a look at, between the last 2 days, dollar Swiss. Each circle represents a trade, right? So let's see. 1, 2, 3, 4, 5, 6. 6 trades in dollar Swiss. Let's go to euro dollar. And let's just start with today. Today, this is the break from today. 1, 2, 3, 4, 5, 6, 7. 7 in the euro, 5 in the Swiss, and let's go to euro Swiss because I also traded that. 1, 2, this is from today. So 1, 2, 3. So 3. So that's 10, 15 trades. The day is not even over. I've done 15 trades. So what's the takeaway from the fact that I've done 15 trades? That, oh my God, I really need to focus on making money. Oh my God, this trade is so important. Or the takeaway is that not any one of these freaking trades, not one of these trades matters to me. It's really hard because when you're in the middle of a trade, there's nothing more important in life than that freaking trade. But you must absolutely lose that attitude. Okay? When we're trading areas in the world, my point being is that none of these trades matter. None of these trades matter. And that's the key thing. You have to think the exact opposite of life. In life, we find one single person, we love them, we marry them, we commit to them. In trading, we are the biggest mercenaries that ever lived. Never ever marry, never ever fall in love, always use them, abuse them, and leave them when we come to trading, right? Trading is not like real life. That's the biggest problem. It's the exact opposite of real life. Everything we do in real life, we have to do the exact opposite in order to be successful in trading. You cannot marry your trades. They are not your spouses. They're not your wives. They're not your husband. If you do, you might as well just give your money to me right now. And that's the hardest thing in the world to basically come around. That in an intraday basic, when you're doing 10, 15 trades in a row, no 1, no 2, not 5 trades matter. Sometimes you have good days, sometimes you have bad days, but you have to ignore every single trade. A stop happens, you just refresh yourself, you put a clean mindset on, and you look at the market with a thank you, because now it's giving you the opportunity to look at the market with a clean, fresh eye. Let me show you what I mean by a clean, fresh eye, right? So here, let's just take a look at the Euro Swiss, right? We started Euro Swiss here. Let me go back to dollar Swiss because I want to show you the definition of what I call a clean, fresh eye. So I start out like every other idiot in the marketplace, thinking the downgrade is unbelievably negative for the dollar, negative for risk. We're gonna kill the dollar Swiss on the open, right? And in fact we do. But here's the point: I'm late, right? You snooze, you lose. I should have been shorting right over here, but I'm late. I let the gap happen, and basically I short the bottom. I get stopped out. I get a little more aggressive, and I say, okay, I'm going to short again one more time just to see if there's a short probability that happens, and I do. We get a little bit more of a continuation in Asia. I take a little bit of a profit, and that's fine. And then I go to sleep, and when I wake up, Europe is a completely different mindset. Europe has already absorbed all of this idiocy of the downgrade. Europe's already seen most of the downdraft, to the short side. I basically escaped very luckily here on a very, very small short, right? Because I know that 7,500 becomes very, very sticky. And then we have the news that the ECB is going to come in and start buying up European bonds. And what does that tell you? That tells you that there's a completely different mindset now as Europe comes on. And the first thing that I look at, I only trade news and economic data, but what did I just say when I started with Funda? I only trade flow on Funda. Do you see an indicator on my chart? Do you see a moving average? Do you see a Bollinger Band? I couldn't care less about indicators. I trade news because that's what professionals trade. Anyways, news comes out, at the beginning of the European session, we start having massive movement in the Euro Swiss, right? Here's a good example of how I use price action with news flow. Whenever I have a big breakout in price action, I trust that price action. Let me go back to a much more granular mindset. This is a 5-minute price chart, right? You see this massive move? We go from like 108.28 to practically 109 in the Euro Swiss. When I have a move like that in 5 minutes, I want to go with the move. That means that I want to trust that something is going on in the market that's so important that I want to be on that side of that flow. That's what I determine as flow. Of course, the ECB comes in at that point, and also probably the S&P, and they started to intervene. And those of you who follow me on Twitter know that I tweeted that ECB and S&P are probably intervening. So I joined the move. I'm more than happy to buy it here, sell it here, buy a little bit of a pullback, sell it here, sell it here. Very happy to trade with the flow. Notice that I basically didn't even make nearly as much money as I could have because I was basically being very cautious. I was just buying the 109, trying to sell the 25s. My primary setup. This news was not, this news was coming all day long. The ECB announced that we're going to be buying. The ECB announced all this stuff was buying. This was not a situation where 1 second and you had to react. As a matter of fact, notice I came in here, you had 5 minutes, 10 minutes, 15 minutes, 20 minutes of actually 30 minutes of price action. That is what you do on an intraday basis. On an intraday basis, if you're not watching what's going on, you're obviously never going to be able to trade. The definition of intraday is that you must be working intraday to the price action. That's why, that's your advantage to the marketplace. If you don't have that advantage, then you shouldn't be doing this, obviously. You cannot do this without watching news and watching flow. But it's not a matter of 1 second. You're not trading against the computer. You're trading on a theme. And this particular time, the theme was that we had this big interventionist move. Now, here's the other thing that I want to show you. Here's what flow gives me a signal the other way. The critical thing here is, remember, we tore it all the way up to 110, and then just as quickly we started to lose momentum, right? What does this tell me? This tells me the market is unwilling to absorb this price action. The market is rejecting the move of the ECB. The moment ECB moves off, I am glued to the screen all day long. Yes, I am. If you follow me on Twitter, you know that, right? I mean, you know that I watch the screen all day long. That's the fundamental thing. If you guys don't want to trade FX on an intraday basis, then, you obviously don't have, cannot be glued to the screen. For those of you, there are many of you who are the great thing about FX is that if you're working, you can obviously trade other sessions. If you're working in North America, you can trade Europe. If you're working Asia, you can trade North America. There's plenty of time to trade this. It doesn't require you to be glued to the screen 18 hours a day. You can be glued to the screen 4 hours a day. But in order to trade effectively intraday, you have to watch the markets. So here's the thing. So the price action just shows me that it cannot hold the 109, right? The 109, it tells me that the market is unwilling to take this trade. So I get short the 109s again, my standard protocol is 25-point target, 50-point stop. Today I was a little bit more cautious. I was taking 20-point targets. I'm basically covering manually. But that is my target. And the reason why I have a negative risk reward is because those of you who know is that the market never makes it easy for you to make money. If you have a short stop, the only thing that will happen to you is you'll get stopped out. My argument here is I'm not advocating that you get stopped out all the time. That's why I have wide stops. My argument is that when the stop comes, you take it like a big boy or like a big girl, and you go on to the next one. But you give yourself plenty of room so that when the stop is happening, you know you're damn wrong. Like, for example, right now, in the euro dollar, right, I didn't take this trade in my own account, but in my flow account, we were short 41.50 because we thought it was going to be further. There was more downdraft in the euro, and the euro took out the 42 stop. We took the stop here at 4,200 precisely because we were wrong, right? You don't fuss around with this thing. As a matter of fact, the trade now is probably to the upside, and the move now is probably towards the 42.50. I want to end this session, this very truncated session, with an interesting variation of what I've been doing. And then some of you can see this. I'll show you. You can see this in a lot of my trading. You know that my standard protocol trade is basically, I have two types of trades. They're all momentum based. The best classic trade I trade is the 35 to the 00. So this is here's the 35 to the 00. Basically, this was me taking the 42 almost all the way down to 4,200 in this particular case. And me taking the 43, I don't know what the hell this is. Where is this? Oh, sorry. This is me taking the 43 to the 4,300 over here, right? That's my bread and butter, best trade. I love this trade. This is the only, if you're going to trade one trade in the FX market, that's the trade you want to trade. You want to trade 35 to the 00s, 65 to the 00s on a big flow basis because that has, in my opinion, been the most robust trade there is. But there's an additional trade that many of you know I trade, what I call the Demeter Trade, where I take the 50 to 25 or 50 to 75 on the upside, right? Well, one of the variances that I've been doing lately is that I actually decided that the Demeter Trade may actually be better when you use the 50 as the point of exit, not the point of entry. So, for example, here in the euro, we had a move to the downside, right? Actually, don't ask me what I was trying to do here. I was trying to pick a bottom, something I should never be doing. I tried to pick a bottom, I got stopped out, fine. But as I came back up to 75, my thesis was the market is going to sell off further. It's going to be negative risk. I want to be short euros to see if they're going to run the 41.50s again, which they indeed did. My point being is that the mean of the trade is a much more interesting trade possibly when you sell 75 to the 50, or you buy the 25 to the 50 on the other side. Because just as the prices tend to magnetize towards the 00 on a shorter time scale, not as much momentum, but enough momentum to make it interesting for us, there may be a move towards the other side to run the stops at the 50s, because the stops are basically clustered at the 00 level and at the 50 level. And we want to be with the flow to try to run those stops on both sides. So my sort of last advice here to you guys as we close out the trading for today in our truncated session is that the meat of the trade, which is something that all of you who follow me on Twitter know, may be an interesting variation if we change the orientation from taking the trade at 50 to taking the trade to 50 as a complement to our 00 trade, which I do all day long in the market every single day. So, having said this, I hope you guys, if you guys have any questions, I'm more than happy to answer anything that you guys want. We got a few minutes here, and I'll be happy to entertain any questions to what we do here. The 00 trade, yes. I'll explain the 00 trade because it's sort of the classic 00. The classic 00 trade is when you have a move from the 00, the 4,400, all the way down to to 65 points, to the 35 on the downside. You sell here and you cover here, right? As you can see, we had actually 3 00 trades. 2 of them were successful, 1 of them was not. Here's the second 00, 42 through 42.35, all the way down to the 4,200. That's the classic 00 trade. The reverse of that is if you have a move all the way up. For example, if I had a move all the way up to 42.65, I may take the 65 to the 4,300. I'm not a scalper. Scalping means you're buying for 1 or 2 pips or 5 or 10 pips. I have a 50-point stop, 25-point target, or 35.65. So I am basically an intraday trader. I think euro is under very, very serious pressure. I think if France comes under attack and the Europeans don't go to a eurozone bond, I don't think the euro will survive in its present form. No, I don't. But for right now, as of this second, it's pro-euro flows, right? Yes, William, that is exactly the new system. It's sort of not a new system. It's just it's a variation on the same system, but it's a variance on these ideas. So for example, like right now, I want to be long this thing at 25, and the moment I get off the seminar with you guys, I'm going to probably get long euro at 42.25. As a matter of fact, I'm going to get long on my other account. My other screen. I'm actually late here. But yeah, I'm long 25s. I'm going to target the 50s, right? You see that? You see me already getting long across the market because I like the idea of running to the 50s and to the 00s because the critical foundation on the technical side is we want to run the stops off of momentum. And what drives momentum? What drives momentum is the story that is surrounding the trading right now. Right now, the story is that basically we've had our big downward sell-off. We have a short covering rally. This is not, it's not a great story, but we have a short covering rally. The short covering rally is going to try to squeeze the late shorts, and I want to join that squeeze and see if I can participate and try to make 25 points. In this case, it's probably going to be 20 points because I came in late. What's 10-4? Oh, 10-4 isn't like you understand. Okay. Don't confuse me with numbers, William. I'm dyslexic. It's already difficult enough for me. Any other questions, guys? Boyke, I just talked to you about this. I reversed the risk because if you don't, you're just gonna get stopped out. My point is not to collect stops. My point is to take stops when I have to. But in the market, if I want to have, if you look at how many, let's just count how many. Let's go to 15-minute chart. So 1 green circle, 2 green circles, 3 green circles, 4 green circles, 5 green circles, 6 green circles, 7 green circles, 8 green circles, 1 red circle, 2 red circles, 9 green circles. 9 green circles, 2 red circles. Why do you think that is? Because I'm so freaking brilliant, or because I have a negative risk-reward ratio? It's because I have a negative risk-reward ratio, because the market doesn't, only fools believe that you can have a 2-to-1 risk-reward ratio and print money. If you want to play, you got to pay. And the price of paying is a negative risk-reward ratio. Okay? Hey, incognito. I couldn't give a flying F if my stop gets stopped, if my stop gets taken or not. As I said, the whole point here is to not worry about any single trade that you're doing. The point is to have a strong methodology, to adhere to that methodology, to trade on a day-to-day basis, which is what I do with my flow trades. Those of you who've been following me for more than a week know how well the flow trades work when you stay disciplined and you stay in proper mindset towards doing them, right? I don't play the harmonica incognito, okay? So I really don't care about what the musical instruments tell me about the price levels or anything else. I trade what moves markets, and what I believe moves markets is news. That's what big boys buy and sell on. They couldn't give a flying F on a 34 harmonic or a 37 harmonic or a 28.80 harmonic. But that's not to say that you guys shouldn't use it. I'm just simply saying that's my own way. Do I wait for the cancel to finish until you enter the trade, or do you enter the market as your price mark was touched? I enter at generally when I'm structured and I'm paying attention and I'm not like sort of doing 3 things at once. I enter on limit. That is, I sell on weakness, I buy on strength, right? But occasionally I will miss. I'll be away, and the price will move through, and then I will decide if I want to enter market. It means I'll chase the price a little bit, but I'm willing to do that if I'm very close to my, like if my limit entry is 25 and the market is 28, I'll probably eat and I'll come in market, because if I feel strong enough, that goes to my third component: flow, funda, feeling. How well do I feel about it? That's the key thing. Do I feel strongly or not? If I don't feel strongly, I will not do it. If I feel strongly, I will enter market. Of course, because once I'm in the trade, you see, what does this trade show you? It shows you that I have a take profit and a stop. I couldn't care less where I go at this point. The trade is going to get done one way or the other, right? So I don't have to worry about, once the trade is on, I don't have to worry about managing it every 5 seconds. All right, guys? Any more questions? Again, my apologies for the screw up. I promise you that next time the acoustics and the technology will be a lot better. But I hope you got a little bit of a inside view on my mindset of what I do every single day. This will hopefully help you understand what I do on the Twitter account every single day, how I'm trading, what I'm doing, and when I post my charts, you guys will be able to understand what I'm doing on the flow as far as my charts go. Right? Any more questions? No? All right. Marcus, Guten Tag. I hope the euro is still there for you in the morning. No, actually, the euro's not going to go away anywhere soon. And this will be interesting, we're probably going to have a pretty vicious short squeeze right now just to destroy all the late coming shorts. But the question when you guys ask me about, do I think the euro is in trouble? Long term, I think it's under pretty serious stress. Yes. It is still the ugliest girl at the dance at this point. All right, guys. Thank you for attending. Over and out. I hope to see you guys next month. Take care. Thank you. Talk to you later.